Hi, I'm Bett Bollhoefer. I have created this embodied product channel for people who have great ideas they want to bring to market as a product. And I have some material that's for brand new product managers and some for experienced product managers. Today, we're going to be diving into profitability. And I would say this is more of a basic product management concept. If you know a lot about profitability, costing, and pricing, COGS, you don't need to watch this video. But I'm going to also be exploring SaaS-specific profitability because that's my background. I've been developing SaaS products for most of my career. So thinking about cloud costs and licenses and things that are really around software. I will try to bring in some parallels to building physical products, but that is not my wheelhouse. So those are some disclaimers. If you're an experienced product manager on doing software or doing pricing, this may not be the video for you, and you can skip to some of the other embodied practices. We're going to be doing some brass tacks of thinking about pricing, why profitability matters, how to do COGS, some aspects of specifically SaaS software that you need to be aware of. So let's talk about profitability. Profitability is not just a nice to have, it's essential and for these it's essential for the survival and success of your product and business. And I like to define a product or service as something that's repeatable. You basically create something and then you continue to resell it over and over and over with very little modification for each customer. And so when you're thinking about building a product, there's going to be a capital investment up front to do design, which you can go watch my end-to-end customer experience, which talks a lot about how to get into that design. And then once you have that design, you're going to want to build it and find out all the costs of all the items that are part of that, which is called COGS, cost of goods sold. And then from there, you have other things like marketing costs and commission, if that's something you're going to be using a sales team for. But we're going to be talking about costs of goods sold, pricing, and how to figure that out. So if you want your business to be sustainable, you want to really get this concept down. If you build a product that's not sustainably priced and you're losing money or not making enough money to cover your costs, you're going to be in a world of hurt and your team is going to lose their jobs. Your company's going out of business. Your customers will be sad because you then don't have the product anymore. This is the very most important thing once you got your design done. You need to understand profitability, cash flow, run rates. Some of these are the words that you hear around profitability. A lot of times I live here in Silicon Valley in the Bay Area, is that a lot of startups focus on growth, which is very important. You can't just have profitability, you also have to have growth. But if you are not making a plan to be profitable, or if you don't think about profitability as you build your service and think like, oh, later we'll figure that out, it's very likely you're not going to make it. And I hate to bring all this bad news to you right at the beginning of this session, but you really need to think about profitability and marginal costs. And another piece that a lot of people feel is like, oh, it's so greedy. Oh, it's so greedy having this product have so much expense or the price is so high. But the truth is, it's not loving to create a product that you're selling under the cost to make it because your customers who start loving your product and relying on it, they're not going to be able to have it once your business goes out of business. So when you're thinking about profitability, it's actually more loving to make sure that you're covering your costs and that you're making profit so that your business is sustainable and is there for the long term, bringing continuous value to the stakeholders involved. All right, so let's go through why it's important to have sustainability and your costs and your profit. Business sustainability, your business will be around to continue to innovate and reinvest in your customer base. It will allow you to have support and marketing. Number two, investor confidence. If you have profitability, it means more people will want to join you either as investors or employees. They want to get involved and help your mission continue to go out to the world. Number three, customer longevity. A profitable company can afford to provide the best service, security, and product improvements, which lead to higher customer retention. Number five, operational efficiency. By understanding cost and revenue, your company can avoid overspending and optimize the pricing for long-term success. All right, I'm going to tell a quick story. When I was at, I'm not even going to name the company because I don't want to give away too much pricing information. We had a product that was just being sold at a flat rate to each customer. And when I came in to that team, I was charged with understanding how the cost moved with usage. And before that, it was just a flat price, no change in cost based on usage or price based on usage. And I discovered through deep research and tagging, a lot of database work with my engineers, that as the usage went up, then the product costs would go up. And we were actually able to redo our pricing structure to allow the price to be based on monthly usage. And it actually allowed our smaller customers to buy our product at a better cost, a better price, because they were using very small amounts of that usage. And so they were able to buy it. Before that, the price was too high. And our bigger customers were actually covering the costs of the product because they were actually using more of it. And they were happy because they were getting the value. So this kind of deep cost analysis is more than just like a nice to have. It is actually the ability to price properly, to allow customers to buy it who couldn't before, and allow bigger customers to pay their fair share, which if they're getting value from the product, they should be fine with doing. So this is really critical to understand how to do this pricing. We're going to now talk about the components of cost analysis. How do you actually do this cost analysis? And again, I'm going to mostly be using pieces from the software side and software as a service specifically versus looking at some kind of physical product. But I will try to draw some analogies. But again, full disclosure, I don't build physical products. I have a software company that builds software, and that is really my wheelhouse. Again, just letting you guys know where I'm coming from. All right, so when you're thinking about SaaS, storage costs are a big deal, and you're going to need to store things. So if you're making a YouTube sort of thing with a huge amount of data being saved, high resolution videos, that's going to be one kind of cost. If you're having text files saved, that's a totally different. So understand that storage costs are part of the percentage of your costs in every SaaS. And so thinking about how to leverage that, and also how many times are you pulling from the storage? Is it like a once a month thing, or is it every 5 seconds? Can you cache things? Those are all going to come into play when you're thinking about storage. Now let's talk about compute. So compute is the processing that's happening in real time. And applications are going to require server resources. I know this might be very technical right now, but if you are going to build a software product, you're going to have to get used to some of this. Some of the words like auto scaling are some words. And I have actually a whole book or a white paper that's called The Profitable SaaS that goes into all of this a lot more detail. One of my main jobs in one of my past companies was just doing cost analysis, and it was the most fun ever. Unfortunately, most startups and most product managers could care less about costs, and so they end up having a lot of failure. But I love it. All right, let's go to the next kind of cost after compute, and that's third-party license. This is a huge, completely unknown to most product managers. When you're using a service like, let's say, Stripe, which is a credit card billing service, it's going to have fees. So you need to really think about what are all the services that your application is going to be using, because those are going to add up over time. So all of those are third-party licenses, and there's a lot of different layers. There's plugins, there's libraries, there's application programming interfaces called APIs. So getting these licenses and thinking about how to build contracts with those parties is very important. And if you don't get contracts, of course, you can face legal issues. So we always want to do everything legally and above board. Let's talk about operations and support. You need to have customer support. And so those are people answering tickets and answering phone calls, if that's a thing, or having those little online chat systems. So this is where some of the AI systems are coming on board and can help with some basic troubleshooting. And these things are rapidly getting better. And that might be something you can really save money on. Another thing is DevOps. So DevOps is an engineer who sits in the back end and launches new product releases or updates or does security patches and constantly is keeping up on all the security issues. That team, the DevOps team, the security team, these are going to be included in your of goods sold. All right, let's talk about cost of sales and customer acquisition, another really important cost. Now, if your product needs a lot of education of your customer, you're going to need a sales team. Sales people, their job is to get out there and educate and help your customer understand why they need the software, why it's differentiated. And that's going to be costly because those salespeople are going to get a commission. And if it's a complicated sale and it takes months and months, they're going to need a sufficient commission to cover their salary and their expenses. The other thing you could do is marketing. There's a lot of different marketing options nowadays. Google Ads is obviously a big one, Facebook ads. And so you could do ads that are very targeted to your customer, and they would then, click through and you'd pay for those, pay for clicks. So you got to think about how to do this. Another big thing nowadays is product placement in like influencers. So an influencer could use your product. They could say how much they love it. They could be very specific about why they love it. And that's a big way, but those people need to be paid. And so you're going to have to build that into your budget of cost of customer acquisition. All right, so let's talk now. So those are the 5 costs. We're going to now jump into the steps to do your cost analysis. So number 1, you need to identify all those cost components. Now, I've talked about things that are used for software. If you're building something, you're going to have a lot of other items such as materials, right? So if you're building a water bottle, right, you're going to have to get plastic. You're going to have to rent or lease a manufacturing space. If there's a manufacturer that you're just basically sending something to and then they send it back, there's going to be a cost of that. So all the raw materials, all of the time on the machines, if you're using those things, components that I just mentioned, storage, compute, licensing, and support are going to be part of that list of all the costs. So you want to make this list of all cost components. And this may be something you take your time, a few weeks with your team and ask them, hey, what's another license that you're using? Sometimes when you build a prototype, you grab a license that's off the shelf, but it's not going to be okay for a commercially viable product. So they're going to have to pay for that. So you're going to have to find out all your engineering licenses, and you're going to have to ask about storage and ask your engineers to think carefully about the kind of storage, cold storage, hot storage. There's a lot of different options. All right, so break down the costs per customer. So you need to figure out that total cost of components and then figure out how much it costs per customer. Now, the cool thing about SaaS, software as a service, is there is multi-tenancy, which means that you have one app that's running on a data center, a cloud, and then each customer has just a little bit of that app. And so you can actually share a lot of the costs across all the customers. And there's this idea of loading or scaling, like how many customers can you load on that one instance of your product? And then they would each have their own little database entry that is just for their own data. Another thing that's really important, the third part of this is metering. Now, if you're using this kind of idea of multi-tenancy, you need to think about metering. So making sure that every piece of resource of all those items is getting metered for usage so that you understand how many resources each customer is using, and then you can refine your pricing over time as you discover maybe one customer has more usage and others don't use that much. You could have a tiered pricing system. All right, let's look at the fourth, which is regularly audit third-party expenses. We had the biggest thing at one of my companies. Again, I'm going to protect the innocent by not telling you the names of these companies, but we had this one company where there's this one third-party software that we were paying by metered usage. And sometimes there'd be huge spikes. And we found out that engineers were running scripts overnight that was just running up huge amounts. I mean, gigabytes, which ended up to be millions of dollars of usage for us. And the engineer had no idea that it was costing. They were just running a script overnight to do some kind of analysis, and it was ending up costing us so much money. And we just found it and we said, like, hey, did you guys know this? And all the engineers felt terrible about it. And they, of course, cleaned up their scripts and made sure everything was much better after that. But regularly auditing these expenses is very important. And then finally, optimize operations and support costs, automating all the workflows. All right, let's move to the next section, which is pricing. Now, I'm just going to say right now, pricing is an art. Pricing is an art. And just another personal story with one of the customers that I had, I sent the sales guy out with a customer to a bar, and I said, just bounce some ideas, just bounce some things, like say, hey, imagine a world, not ours, but would you pay this much? Right? And it's really just trying to get the reaction. Again, that emotional intelligence. Is this person freaking out? Are they like, you're crazy? Or like, wow, that's a really good deal, right? So you're trying to figure out, are you in the ballpark? And sometimes that's really the only way to start figuring out what's the right price point for this. Another thing that people do when they're building maybe an app is they actually have a sign up, a fake sign, not a real fake sign up flow, but at the end of it, basically you get put on a list. And in that little flow, you say, the price is $199 a month. And then you see how many people sign up for that. It's almost like an A/B test. And then you say it's $399 a month or it's $199 a year. And you basically find out how many people would really pay for that. The problem people who do pricing find is that when you ask someone in like kind of an abstract way, would you pay this much for something? The person could say, sure, yeah, I will. But when it comes to comes time to put their credit card in, they're not going to do it. They're not going to pay that much. So it's really, really important to find out what is the actual price the person's willing to pay. So having this little flow that says at the end of it, we are going to be putting you on the list as soon as this product is available. I know it sounds a little bit sketchy, but it's honestly the best way to find out if people are willing to pay for that. So you could say there's a deposit, and then when the product is available, you will be charged this much, and you show that number, and if no one signs up for it, you just know right away this price is out of the ballpark. Another thing to be aware of, and this goes almost to the spiral dynamics levels, which if you don't know what I'm talking about, please Google that. There's a ton of basic videos that go over spiral dynamics. But you may have a product that is a like enlightenment product, as may be said. And like, I'm just going to use cars. You may have a Cadillac and you really want to sell it, but your customer's budget is for a Pinto. And this is a real story. So I was developing a Cadillac product. It had every feature. It was so luxurious. It was a beautiful ride. I mean, top level product. And my sales guy kept telling me like, hey, Bett, the customer wants a Pinto. They want the Cadillac. Yeah, they do, but they can only afford a Pinto. Can you make us a Pinto version of this product? So I had to really think carefully about those features and those cost of goods. And I worked with my engineering team to whittle back. And just for example, from that specific one, is we were running data analysis every like 5 minutes or something. And that was really pushing up the compute price and also pulling storage and saving the storage of the analysis. And what we did was we said it's going to happen 4 times a day. So the Cadillac was every 5 minutes we do the processing. The version that we ended up with was 4 times a day, right? So you think about how can I reduce the price of this, or I should say the cost of this, so that we can fit into that customer's actual budget. All right, so let's go through the principles of pricing. Number 1, willingness to pay. How do you measure that? Are they ready to put their credit card in? Are they ready to sign a deal? Until then, you don't actually know if the pricing is right. The pricing has to reflect the value this service is perceived at, not just the cost of providing the service. Next, competitive analysis. Now, if you watched my previous video on my story of being a young product manager as a child, I built scrunchies. And I had to leave the scrunchie business because the competition was too stiff. They were able to sell the scrunchies at the dollar store for like 3 for $1, where I was selling each scrunchie for $7. Competitive analysis is critical. If you're going into a market and you know you can build something so great, that Cadillac, but your customers can afford a Pinto and they want to buy a Pinto, you really need to be aware of that. So customers, at the end of the day, they're going to pick the thing they have the money to buy. So you really need to do your competitive analysis. Is there already someone in that market selling at that price point? And if your value is around that same thing and the target market can afford that, can you make the product at that cost? And if not, you need to get out of that market. It's not going to work. Let's go over cost-driven pricing. So you want to make sure every pricing tier covers the associated costs and contributes to overall profitability. Now, remember how I mentioned that I created usage-based pricing and I had tiers so people could fall into one of those tiers. And you'll see a lot of times all these different software services that we've kind of gotten used to, like Zoom and whatever it is. It has different tiers. And you really need to think as you're building these, can you make tiers that give value for each of these different pricing points? And then also make sure that your costs are under that and you have a margin. And when you add up all those margins, you're profitable overall. Now, sometimes there's these freemium versions, right? Where it's a freemium version. You have to be so aware of how much it costs to do that freemium, because basically it's marketing. If you have a freemium service, what's the actual cost to you? And you need to put that under your marketing budget, because that's really what it is. It's marketing. And the paid versions of that's where you're going to be making the revenue, and that has to cover that cost of the freemium. All right. Excellent. So we're going to now talk about a profitability calculation. So calculate cost per customer for each tier. Determine, and by the way, all of this is in my workbook. So if the formulas are just, I'm just giving you the concepts, go to my workbook on my website, bettbollhoefer.com, and look in the menu for the embodied product link, and you can find out all this information. All right, so cost per customer, calculate cost per customer. Determine the break point, even point. Determine the break-even point by analyzing cost versus revenue per customer. Adjust the pricing to cover the free users, ensuring that paid tiers make up for the losses in those free plans. Finally, experiment with the pricing models and figure out something like per user pricing or usage-based or flat rate. All right. So we've gone over a lot of basics here. And again, I said this is pretty a basic thing. All entrepreneurs, all product managers need to understand profitability. Of course, there's not always a pricing team. If you're very lucky, you work in a very big company with a pricing team, but still as a product manager, you should understand these basics. And if you are an entrepreneur launching this for the first time, yes, absolutely critical for you to do this. So let's do this summary. Achieving profitability requires strategic balance of cost control, pricing optimization, and customer acquisition efficiency. Understand and track all the costs to avoid unexpected losses. Price must be based on value, not just competition, but also ensure that each tier contributes to the bottom line, and regularly review profitability metrics and adjust as needed. If you can master this cost analysis and pricing, you can transform and transition from a surviving to a thriving and a long-term successful company. All right, so I'm Bett Bollhoefer, and I'm basically creating this curriculum for you as a aspiring product manager or an entrepreneur who has a new product to bring to market. And I also can talk about services. So all of this is free resources for you. My workbook is a free resource. And if you have this idea and you're really getting things going, but you need to brainstorm and work with someone who knows what's going on. I've been a product manager for 25 years, something like that. I've done product in various different ways as a software engineer, building things, and then owning the team and running things in various different companies. I am here for you. I would love to work with you. I have a free 15-minute consultation by phone that is available to you. And then after that, you are willing, if you're seeing value, you can hire me to work with you. I not only can do consulting on the brainstorming and helping you envision and plan the product, I also have a software company called Red Forest Insights where we build SaaS products, very lightweight SaaS products, and it might be your prototype or it could be your final version to get your product, if it's a software product, out to market. All right, well, I'm Bett. If you like this content, please click like, subscribe, and share with a friend. Namaste.